Should you buy? Should you sell? Should you hold? Should you rebalance your portfolio? In today's show, we're going to discuss this and a whole lot more. You can see crypto taking another dive down. We did say there would be high volatility. And remember, part of the bottoming process means a lot of these coins will come back down towards the wick lows that were most recently put into the market. So let's get straight into it. We have a whole lot to look at. It is going to be a pretty quick show. So smash the like button, hit the bell notification, and subscribe to the channel. First and foremost, crypto doing something very different to what the equity markets are doing, because if you do have a look over here, you do have the S&P 500 futures, which continuously is putting in higher moves over here. At least we've had now 4 candles in a row that have been green for the S&P 500 futures over there. And it actually looks kind of similar to what Bitcoin is doing, minus the bounce over here that Bitcoin hasn't yet had. But if you focus on specifically this downsloping trend line over here, which was broken, right? You came back and you tested that, and now you're starting to challenge towards those highs over there. So definitely holding up a whole lot better. If we look at Bitcoin over here, well, this is the similar outlook that we can highlight over here with that downsloping trend line. As mentioned, we broke out, came back into the zone, but we just haven't yet had this push up. So since Bitcoin is typically correlated very, very closely to what we see within the stock market, the question remains, are we going to get that bounce up, right? Well, at the end of the day, this is a really critical point over here, and we still do have this wick, which you could come back down just a little bit lower into that zone, but you definitely don't want to see any candles for Bitcoin coming below the bottom of the range low. If you do come below those wick lows over there, that would mean inevitably you're probably going down anywhere between $85,000 and $86,000, which is where your next major levels of support remain in the form of high time frame moving averages, which should catch price over here and bounce it, right? So right now, price is still very much range bound. We are below the high volume areas. If I put on the volume profile over here, you would see that, right? We're currently caught below the point of control. So that's going to be one area of interest that bulls will be looking to reclaim. And it's a highly, highly important time within the market where both bulls and bears are fighting absolute tooth and nail to take control of price, right? Of course, if we do break and hold below that, that would be inherently bearish, but understand there will be some support that's coming in over there. As you can see on this chart over here, we do have a high time frame moving average. This is the 20 moving average on the 5-day time frame, which historically does have significance and tends to bounce price. Now, each and every single 5-day candle close, this is, of course, moving towards the upside. Previously, this was situated around that 85K level. Now it's at $86,000. And if we do go on to the daily time frame, well, also, which many traders do focus on, is going to be the 200 EMA and the 200 MA, which is just slightly below that and also rising. So 85, 86K is the major bounce level. The opportunity that there would be to reevaluate as well is if you do get that breakdown into that level and you sweep below the bottom of the trading range, but you consequently reclaim this zone, right? If you do reclaim that, that would start to look like a deviation into major support and therefore would provide an opportunity. But the question is, what will happen to your altcoins, right? That is the most important thing, because the altcoins would probably get pretty knocked once again in that situation. So should you buy, should you sell, or should you just continue to hold on and wait for better days, or should you reposition your portfolio? We'll get to that segment in just a moment's time, right? So range bound until we leave one of these zones over here. What are the odds that we're going to break down, right? That's the question. What are the odds that we do this? What are the odds that we break out the top side? At the moment, I'd honestly side with around 50-50. It's anybody's game over here. The pendulum will swing back into the bulls' favor sometime next week, right? Generally speaking, you see about a 15-day period where the bears have the opportunity to break price action down, and then you have 15 days where bulls will retake control and attempt to break price action up. And consequently, the last 100 days or so, price has pretty much just been range bound over here, caught between these two various levels. So we're looking at that over there. Now, getting into the topic of the day and the question, keep on holding or exit positions at a loss. I think it really comes down to this chart over here, and it comes down to your timing, right? Your how long your time perspective is in terms of how far you want to be in the market cycle for, as well as how much drawdown you can take, as well as are you on leverage or are you just on spot. I think that I'm going to talk mostly towards the high time frame participants, because I think that's the majority of the audience is people that are in the market for the long term. They want to play out the cycle from the bottom, which means that you would have established most of your long positions around here. At least if you're watching the show, that's exactly what I did. So for anyone that followed along, you're pretty much just holding on and you want to exit wherever the cycle finally tops, right? So if you're in that camp, what should you be doing? Well, I think that the logical answer is that you probably want to just continue to hold. And the reason is because you are theoretically coming into major support. As you can see, the yellow line running across was the previous exact all-time high. We've had multiple consolidations above. This is the first major correction into that zone over there. And then alternatively, if you also look to where the initial peak was put on the total cryptocurrency market cap at 2.39 trillion over there, you can see resistance was found, had a big correction. Resistance was found again, had another big correction. And then, of course, you bounced up to set in the ultimate top. And those are going to be major levels of support, right? That also lines up with the Gaussian channel, which we did cover yesterday. So pretty much you have a huge amount of support over here. And smart money would probably look to pyramid into a position like that, right? Meaning if you had no exposure into the market, you'd probably be looking to make smaller buys, around this region over here. And if you do come down a little bit deeper, you'd probably be making larger buys. Now, that is simply just buying support and selling resistance on a high time frame basis. The question is, are you at support or resistance? And I think the simple answer is this is support, right? This is support and it's not resistance. We can have a look at this from multiple different perspectives. But if we go back in the past over here and we have a look at what happened in the price cycle, well, you can see in this environment, price had overextended pretty far above the Gaussian channel. It started to angle it up quite aggressively over there. And this was your prior all-time high. And you can see it definitely got a little bit choppy and scary into that environment where pretty much from the high over there down to the next candle low, you were talking about a 35% correction. So I would definitely say that there are some similarities. It's not exactly the same because the monetary policy and what the Fed was doing in this environment was, of course, very different. But that could still yet to be coming, right? And if you look at this from top to bottom over here, well, you're talking about a 24 to 25% correction. So point being is that we have had scarier times like that. When you zoom out and you look on a chart right now, this looks like it's absolutely nothing, minuscule, before price rallies on further. And then you talk about the real serious corrections over here on the total cryptocurrency market cap, which in that instance, you were talking from top to bottom, 56% corrections. So right now, everything is actually par the course in that regard. And you can go back to the cycle before that, and you saw something similar as well. Testing those prior highs over there, Gaussian channel flips green. And if you go from high to low, how far down was it? About 39%. So very similar to what we're seeing right now. And look at what came next, right? Back testing into those highs, Gaussian channel flips green. You have support underneath it and price rallies up. So again, just touching on what we said yesterday, I think if you gain acceptance below these levels, gaining acceptance would mean spending multiple candles below these zones over here, breaking back into the Gaussian channel. You would then definitely get some sort of a dead cat bounce or relief rally, which would probably lead into a lower high. At that point, you can say acceptance is being gained below these levels. And now something majorly different is happening. And I think probably at that point, in terms of spot positioning, yes, that's the zone where you probably start to exit, right? That's where you can cut your losses and you exit your positions. At the end of the day, the decision's up to you. You need to manage your capital and you need to know at least what you can afford to lose, right? How much drawdown can you actually afford to take? Now, this will differ completely depending on whether a person's on leverage or not. Spot trading means that, of course, you're buying the underlying asset and you have a very, not a low likelihood, you have no likelihood of being liquidated on spot, right? As long as you hold that underlying asset, there's always a possibility that when the market bounces, the volatility could play in your favor and you could recoup some of the losses, right? However, if you're on leverage, well, if you're risking liquidation, that's a whole nother topic. You need to understand where your liquidation levels are and be realistic with where price could possibly go. Right now, we need to wait for the weekly close. That is probably the most important thing. Each and every single weekly close has become increasingly more and more important while bulls are skating on thin ice. And it's really an absolute dogfight out there between both the bulls and the bears for who is going to take the reins. Now, if bulls can manage to close price action anywhere around here, a little bit higher, then you would start to say that, bulls narrowly held on in this dogfight, and maybe, just maybe next week, they can continue to take control and we'll have a beautiful wick low that would show a strong invalidation. One thing that I can tell you for certain is that the crypto market sentiment shifts very, very quickly. And if you start to focus on these highs over here, and you can imagine in a couple of weeks' time, somehow miraculously, bulls are able to push price up over here and start to close above these highs, this will look like what was the most obvious higher low in hindsight, and everybody will wish that they bought over here. So again, should you keep on holding or should you exit at a loss? It's going to be a completely dependent answer depending on who you are and what your risk profile looks like. If you are in it for the longer term and you expect that the bull run is going to persist over the course of this year, and you can afford to continue to experience more drawdown and wait for a lower high with some sort of a dead cat bounce, then I think the answer is to hold. However, if you're somebody that can't sleep at night because you're under so much pressure with the markets at least drawing down and watching your portfolio decline, well, maybe for you, it's better to just exit completely and wait to re-enter at a higher point when there's strength in the market, which would probably be once you take out those highs, and then you can say a confirmed lows in. Some savvy traders at that point, if they know what they're doing, might allocate, 1.25x leverage, at which point they have the same position size when they re-enter over here. I'm not advocating that you do that, but if you know exactly what you're doing, that is what you could do to minimize the risk, as you could theoretically, wait for the reclaim over here, exit all positions, add on 1.25x leverage, which is a low leverage position, and therefore you have the same position size as what you would have if you had just held the position originally from here, but way less risk, right? So that's the important thing to understand. There's a lot of moving parts over here. Looking at Bitcoin as well, or the total cryptocurrency market cap on the high time frame. At the end of the day, this is still a big cup and handle formation, which is breaking out and still attempting to play out the upside move, which right now is still more probable than not. And to meet that upside target over there would provide another 55% move, right? So if you were thinking of this as a risk to reward play, and you're simply working on those targets, well, remember, you always want to have favorable risk to reward odds, which would be in the region of about 3-1, right? So if you're looking at about a 3-1 and you have your stop loss underneath that wick low over there with a hard stop and you're targeting towards the top there, is this a favorable setup? Well, according to this, yes, it is. You're getting a 4.61 to 1 risk to reward ratio, which means for every $1 that you're risking over here, you have the opportunity to make $4.6. Now, those are good odds, especially if we wait for the weekly close over here and this week closes like that. Then maybe next week you'll see a little bit more chop, something down there towards this wick over here. We'll talk about the 50% of the wick in a moment, and then maybe it will be a choppy ride, but ultimately you make it back towards those tops. You can manage your risk at a later stage by raising your stop loss over there into break even. So these are the types of things that you're looking at. There's a couple of very important charts that I'm focusing on. Two most specifically, I will share that with you in just a moment's time, but I hope this makes sense. Let me know in the comments what you think. Do you understand what I'm saying over here, or is it confusing? Give me a thumbs up or thumbs down. I'd love to know. Now, one thing I can tell you is the sentiment is absolutely wrecked, right? This is probably one of the worst I've seen in terms of sentiment in a long time. And I like this tweet over here from Crypto Amsterdam because it just showcases, again, how quickly things can start to shift and what the sentiment was like in 2021, right? 2021 gets praised a lot, he says over here, but trust me, after 1,000 days in that cycle when Bitcoin was consolidating after its first leg into new all-time highs, the altcoin sentiment was absolutely terrible, horrible altcoin sentiment. No altcoin season talk. Institutions won't buy your altcoin chatter. They were talking about institutions are only interested in Bitcoin, very similar to what we have right now. New launches or alts like Solana actually pumped a lot, but then dumped between 70 and 90%. And Bitcoin multiplied up and up and up, continued to maintain the dominance ride to glory, right, as Bitcoin continued its run. And then Bitcoin dominance was at all-time highs, altcoin dominance at all-time lows, and then suddenly there was a pivot and a shift within that, right? And you started to see the drop in the Bitcoin dominance, and then, of course, the rise in the altcoin dominance, which led into eventually an altcoin rally. So these were the types of comments and things that you would see, which we're seeing right now, right? If you say altcoin season, it's like a swear word at the moment, right? You might get stoned. Luckily, we're on YouTube over here, so they can't hit us with a stone. But if they could, they would, right? So If we have a look over here, we can see the DXY is also a good indicator because, of course, the DXY is starting to show weakness over here and the possibility, it's not over yet, but it's showing the possibility that maybe, just maybe, this is going to break down. Now, if we do start to lose this yellow box over here, this is the historical range high, right? Which we've now hopefully deviated above. We're looking at this as a possibility for deviation, break back into the trading range and run it back down towards the bottom. When we look at this historically, what we've seen is that environment is actually what leads to the last phase, the final phase of the bull run, right? And then when you deviate the bottom of the trading range, which would essentially be these lows under 100 on the DXY bottoming is where the crypto cycle tops, right? These are some really key factors that you have to understand. You have to look at things like the DXY, you have to look at things like the Bitcoin dominance, and then you also have to look at the USDT dominance, as well as ETH BTC. We can throw that in there as well, right? Bitcoin or crypto cycles top on extreme greed, and extreme greed can be measured by, the dollar is dead, the dollar is over, it's done for. So the dollar bottoms, that's 1 point. The Bitcoin dominance also bottoms because there's such exuberance and greed in the altcoin sector. That's point number 2 for understanding when the cycle is coming to its end. And then, of course, we have USDT dominance also bottoming because nobody wants to hold USDT because they'd rather risk their money in the market. So that's point number 3. And then ETH BTC usually tops with Ethereum outperforming, right? So these are some of the things you need to look for. It requires a lot of patience, right? A lot of patience before you get to that phase of the market. And people have very short attention spans. So ultimately what you're looking for is something like this, right? Here's your dollar bull trap and your altcoin bottom. Break back into the trading range, run it all the way through, lower high, deviate below, dollar's dead, crypto cycle tops, right? Rally it all the way to the top over there again, dollar bull trap, deviate over the top side of the trading range, altcoins bottom, altcoins are dead is the at least thesis over there, break back into the trading range, run it to the bottom over there, dollar's dead, we don't need the dollar anymore, it's over, and the dollar bottoms, and that's your 2021 cycle top, right? Run it all the way to the top over here, break back in the trading range, consolidate, and now potential. I'm not saying any absolutes, there are no such things as absolutes in the market, but nevertheless, you have had an absolutely stellar, massive run over here from the DXY. And if this is the deviation and we break back underneath that trading range, well, just remember this image. That's all you have to do. Remember this image, breaking back into the trading range. That could start to really get things into high gear, into the next phase of the market cycle. And then we can reevaluate as we approach the range low if we're going to deviate below that. And we'll read the sentiment. The point is that right now we're looking right at that zone where that deviation would happen. And you have to ask yourself, what is the sentiment like? The sentiment's almost worse than what you see in the bear markets. It's unbelievable. Terrible, terrible sentiment within the market. So the 2 most important charts that I'm really focusing on and watching over here are these 2, right? Now, I'm not saying that you can't go beyond this wick over here on USDT dominance. Absolutely, you can. There has been times before where you put in massive wicks and it looks like a top and you can see price eventually climbs back higher. But what I'm focusing on over here is the wick fill at the 50% level, which is 50% of this entire wick over here, which means that, it looked like yesterday we might hit it already last night, at least my time last night. It looked like we could potentially hit that zone. How far away are we? About 3% away on the USDT dominance. My plan is I'm going to watch and observe as we move into the zone over here and look for weakness, look for extreme fear in the market, which I believe we've already seen, despite what your fear and greed index will suggest. And then if we start to see that whilst prices are still holding major supports, that becomes an important signal for maybe, just maybe, there's a potential bottom which is currently forming, right? So that's the one thing. The other thing that I'll look at is pretty much exactly the same setup, but on the Bitcoin dominance, right? Bitcoin dominance pushing up into the 50% of the wick zone over here, and the possibility of a rejection that would be at 62.69%, which in terms of percentage away, how far is it? It is 1.46% away. Now, understand that there is a possibility that oftentimes in trading and investing, you will revert to the 0.786 Fib retracement level for an extreme move and a major stop and reversal, which is why I still open up the possibility that, maybe you just grind beyond this point over here. And that would be absolute max pain. If you think that people have capitulated now, wait until you see what they do if Bitcoin dominance were to come all the way up to this zone, which would give you a level of 66.27%. Unfortunately, that is possible, right? That is possible. I'm not looking at that as the most likely case. In my opinion, the most likely case is, given the rising fear in the market right now and the move into the 50% level over here, my base case is I'm going to look for rejection from there, but we reevaluate when the time comes. So again, going back to the title, should you keep on holding or exit everything at a loss? I think if you start breaching beyond this 50% level and it looks like there's absolutely no ways this is going to stop, yes, at that point, maybe it's time to start to exit those positions. Monitor each coin independently that you may have exposure to and ask yourself, have you lost support or not? Are you at support or are you at resistance, right? That's the question. Are you downtrending or uptrending? Now, I found this pretty interesting because yesterday Rand came out with a recovery portfolio list. So I thought one exercise that we could utilize is to basically do that exact exercise, right? Are you at support or not on these coins, right? So his recovery portfolio speaks about consolidating your positions into just a couple of coins, which I do think is pretty good as a strategy. Why? Because then you can have your finger on the pulse and exit positions quickly if need be, right? So positions that he looked at: store value, Bitcoin, the three L1s, Solana, 𝗬𝗎, and Hype. Then we have DEXs, Aero, Jupiter, MEV, we have Jito. Then we have Link, ENA, and Curve for real world assets, and then stablecoin plays, right? So we're going to have a look at that. We'll see what happens over here. We'll go through the list. The first thing that I want to mention is Solana, which is my biggest holding. You did just get also the SEC coming out and acknowledging the Grayscale Solana 19B4 filing, right? So pretty good news over there when it comes to Solana for the long term. Also, you have Van Eck, which came out over here, and they said that their Solana price target by end of 2025 is $520. So a little bit of free marketing over there, at least for Solana. And then the question is, will Solana get the next ETF? Well, so far, if you look at Poly Markets, the chances are 85% that they will, probably following this bullish news that's just come out over here. But at the end of the day, the only thing that pays you is the charts. We have to look at the charts. So let's go through the list over here. We've covered Bitcoin at length, so I'm going to skip Bitcoin. You know the levels. We have the range low on the daily time frame. If we lose that range low, your next key support is $85,000 to $86,000. And what is your upside potential? I guess, how long is a piece of string? I think a realistic answer is probably you're going somewhere between, on the low side, $120,000 to $130,000 for Bitcoin. That would be the at least pessimistic case, bull case for Bitcoin. The more realistic would probably be around that 145 to 50 mark. And then I think very optimistic would be $200,000 Bitcoin price. So run those numbers yourself, do with it what you will. And now we can look at some of the other coins. Are we at major support? Quickly touching on Bitcoin on the weekly, though, also, we do have the stochastic RSIs, which are fully resetting over here. And again, if you do lose some of those key levels, just to highlight very, very quickly some worst case scenarios, you do have your 50% level, which is coming in over here at $79,000. And then right at the previous highs over here, if you did fully retrace the entirety of the move, you're talking about a $70,000 Bitcoin. And that lines up with the golden pocket at your 0.618 and 65 fib levels. That's taken from the low to the exact high over here. So those would be major support levels. Of course, if you play this out and Bitcoin dominance does rise to the 0.786, you can pack it up and put in your McDonald's applications, because you're done, right? Your alts are going to get absolutely killed. What I don't want to see is, I don't want to see this break below this wick over here, which is the origin of the move, right? That is incredibly bearish. If you take out that wick low, which for Bitcoin is going to be, let's just quickly highlight this candle to see exact, your low of the candle is going to be 66,783. That is kind of like, it's over, right? You break below that, it's over, right? It's done. We're done. Just pack it up. Next lower high that comes in over here, we exit all positions, and we'll see you at the bottom, which who knows where that might be, like 40K, 50K in the bear market, right? Okay, that's not happening yet. One step at a time. We don't want to hear your crocodile tears. I can read your comments over there. Just calm down. We're not at that point yet, right? Next, let's have a look at some of these other coins mentioned. So next is Solana, right? I'm just showing on the weekly time frame to give you some higher time frame perspective. here's the Solana chart, big cup and handle formation, started to break out, back testing, back into the neckline yet again. Stochastic RSIs are attempting to reset over here, but they look very sloppy and, not great. I'd prefer if these stochastic RSIs were way lower while price was coming into those levels. At the end of the day, these are your levels, right? You hit the golden pocket and you started to bounce on Solana. That was straight into that 0.65 and 0.618 fib level. So price hit exactly on the low, $175.89, and you had 175.23, which was for the 0.65 level. So golden pocket was tested and price held, right? So we'll continue to pay attention to this. If you lose these levels, your next major level, this is realism over here, is $120, right? $120 for Solana. I guess if Bitcoin were to play out that move towards the downside, that's the kind of wreckage that you can expect, is another 35% down on some of these, these majors, right? Like Solana. So that's one over there. We've covered that. Next up, what do we have? We have hype, right? We have covered hype quite a lot. I should probably look for, this is going to probably be the best fit chart over here for hype. Let me just find it over here. There we go. So let's go over here. Hype. Look, I'm not going to show you on the super high time frame because there's not enough price history. But essentially, what you're looking at over here, you do have a pivot level that's lining up over here. I'll make it maybe just a bit bigger. Let's solidify this line over here. Let's make it nice and big. We have covered this. Point is, you're at mid-range. Mid-range is support. I think you could deviate a little bit lower, and I think you should be fully prepared even for a move back down to about 21. Which would fill 50% of that wick. It would meet up with this trend line over here. But if you are following the recovery portfolio that Run has given and that interests you, then that's what you're looking at. You're possibly looking at a move like that. So repositioning from weak coins into stronger coins, that would be your expectation if you want to continue to maintain market exposure. Your alternative is you just exit all your positions and then you hope that price comes down to those low levels and then you re-enter over there. But we want to see this maintain the previous month's mid and create some sort of a deviation, even if you do get a smackdown into that level like that. So that is hype, right? So we've covered that one over there. The reason I'm going through this list is to show you, what is at major support and what is not, which ones I probably wouldn't touch and which ones I would. So far, BTC, Solana looks fine. We covered hype. I missed 𝗬𝗎. Let's quickly go to 𝗬𝗎 over there. Let's go 𝗬𝗎 on the weekly time frame. Here it is. Okay, so what are we looking at on 𝗬𝗎? I'm going to just quickly clean this chart up a little bit over here and let's grab our fib and we're going to go from, of course, the low to the high. So you can see we've already breached straight through that 50% level over there. This is a pretty key area of support. You can see basically hit that to the T. If you look at the prior little order block or consolidation that led to the up move, my validation would basically on 𝗬𝗎 be this low. If you end up losing this low, this is where you're going to next. This is going to be your next meaningful support, is going to be coming down at $1.90, right? So for 𝗬𝗎, stochastics have reset, but they haven't turned back up yet. Where will they turn back up? Probably if 𝗬𝗎 starts to get back to about 390. So far, if we look at this list over here, things that would interest me is, BTC, Sol, 𝗬𝗎, hype. I'm all good with those. This is probably where I start to deviate a little bit and lose interest, right? Next up, we have Arrow, right? So we can go to Arrow, USDT, and we can have a look at where these are. There we go. So Arrow, I can't even put a fib level on because it's already lost all of those zones. So basically the next area of interest, although the stochastic RSIs are fully reset, I have to be looking down on Arrow to about 50 to 65 cents. So anywhere around there becomes major support, right? So probably I wouldn't get this one yet. This is still very, very heavy in my personal opinion. Next, we have Jupiter, right? So we can look at Jupiter. Let's see, Jupiter, USDT. We'll find that one over there. Let's look at the one on MEXI. Here it is. So this one's already tagged the range low, but also I don't see any momentum over here. So personally, I'd probably leave this. Stochastic RSIs are also trending towards the downside. I'd probably wait for this chart to get a little bit cleaner and properly reset, right? So probably skip this one. Personally, I would skip this one. Maybe I'm fudding Rand's bags here now. 𝗕𝗬𝗕𝗏 is the next one, right? So let's quickly go to 𝗕𝗬𝗕𝗏. USDT. So remember also the majors will at least have limited downside compared to what you're going to see on some of these other coins, right? If Bitcoin does dump to those low levels, these things can get absolutely smashed, right? That's also another 30% down to range lows. And it's just chopping about. I'd also wait for cleaner chart, cleaner price action, either tag the range lows or start to reclaim some key highs. If it starts to get above $3.25, $3.30, then it will start to look like, okay, maybe it's attempting to put in a bit of a high low over here. At that point, these will start to turn back up. And then I think you just have a bit of a safer trade, right? Link, let's go to Link. Now, I know you probably put Link on here because Link is, of course, an Oracle solution that's integrated with basically absolutely everything out there. And it's probably considered viable because it's a USA coin, right? And I'm sure that Trump's at least family are allocating into Link as one of their coins, right? So these are the levels. This is your range high. Theoretically, that's not too bearish yet because you did wick perfectly. If you anchor your fib from the low to the high, you wick directly into that golden pocket, went slightly through it, but you've maintained it. You've started to bounce over here. If you start to get closing candles, back above the 50% level, which dollar-wise on Link is going to be get and hold above $19.52. This one probably still looks okay, right? Stochastic RSIs are still trending down, so there is some work to be done over here. And at the end of the day, the origin, the little order block over here that you set in at 1380, which led to this big move up, hasn't been breached yet, right? So this is your range high. I think as long as you essentially, let's summarize this one, if you can just get back above the 50% level, close multiple candles over there, that'll probably look good. But after the weekly candle, there's going to be a massive wick over here. So next week, you might see some more volatility where you just come back down one more time, fill some of that inefficiency, and then you start to move towards the upside, right? Okay, so that is Chainlink over there. So I'd probably put Chainlink on the list, BTC, Sol, Sui, Hype, Chainlink. Those are some of the ones that I'd look at. For me, I'm not comfortable with Aero, Jupiter, Jito. I'm not interested. And now let's go into ENA and Curve, right? ENA and Curve. So this is under his stablecoin sector, right? ENA USDT, here we have it. Okay, ENA USDT is in a strong downtrend, falling like a stone in water, and I expect it will probably hit this level, right? So the level to watch for 33 cents, 335, that's level to watch. And I probably think based on the aggressiveness of this down move, it probably breaks through that level. And then maybe then it gets a rebound, right? So I'd be looking for something like that. So if you were willing to take this trade, personally, I'd rather wait for the sweep below, wait for it to break through, reclaim, then you get the deviation, and then you can trade it back towards the range highs, right? That's the ENA trade. I wouldn't be a hodler of this. Okay, so we've covered ENA. And lastly, under stablecoins, we have Curve, right? Now, Curve is also one that's been heavily hit. It also it's an older coin. I don't know if they've changed the tokenomics or anything over here, but I'd imagine there is a lot of underwater market participants because if I just, zoom out a little bit, this is kind of what the chart looks like, right? So this was your 2021 cycle, nowhere near those highs, right? Nowhere near those highs, where you have to consider what something with strength looks like. Solana at least made it back to new all-time highs. With something like this has been smashed, right? Nevertheless, is it at support? I guess the answer is yes, it is at support, right? Where do you not want to see it break below? Well, the origin of this move, which would be the lows, that would be like going down to new lows. Personally, I would skip this one. I'm not going to touch this one over here, but, Rand probably knows something that I don't. This is coming down over here. If this starts to slowly turn back up and bounce off of that critical zone at 20 on the stochastic RSI, maybe it'll start to turn a corner over here. But I'm not that hopeful that this thing is going to trade anywhere near these highs over here. So those are the coins that I'm looking at, right? Now, let's go into the fear and greed. Fear and greed has come down, right? But unbelievably, it's not even in fear. I don't know, guys. You tell me, are you fearful or not? How do you feel in the market? Personally, I received many messages last night. The types of environments where you see these FTX types of capitulations and things like that. Those are the types of messages that I started to receive just before going to bed last night. And that tells me extreme fear, not just fear, extreme fear. But according to this, we're in neutral territory and everything is hunky-dory and fine. I personally disagree. We can look at the funding. Funding is negative mostly across the board. Slight positive, in the recent hours on Bitcoin over there. And if you look at high block, this is where we're getting the data from. Of course, this is high block over here. You can see the BTC retail long percentage is elevated, right? So if you look at the true longs and shorts accounts, you can see it's starting to roll over, giving signs of reversal. They say over here, as the reversal unfolds, long positions may close while shorts enter into the market, right? Potentially leading to a price pump that traps newly opened shorts. If there is a short squeeze at a later stage, anyone that's opening shorts, they're going to get squeezed out of their positions. And when they get squeezed, they essentially market buy, and then you get the move up, right? When you see major supports holding, and that's the key word, the support must be holding, and you have some of these things like negative funding, as well as extreme fear sentiment-wise in the market, that is usually where you find some sort of a bottom. Now, there can be high volatility in that bottoming process, don't get me wrong. There's nothing, I'm not saying anything like this where, it would be like, well, that's the bottom. That's the exact bottom. The bottoming process could involve high volatility where while these funding rates go negative and there's extreme fear in the market and shorts try and open positions and dominate the market down, you could get these quick spikes, quickly close back towards the upside. So it is violent and volatile, right? We do see that. At the end of the day, we had the biggest liquidation event ever. We've already liquidated all the people, right? So I'm not sure who is left to liquidate. That's the question. So we're still waiting for that, right? So let's see what happens over here as that unfolds. The daily exchange volume started to turn a corner. I'm waiting for the update, which should come in a few hours' time. For the 7th of February, you can feel free to go look at home by yourself. In a couple of hours when this does reset over here, if this does start to turn over, that might be a signal that maybe just one more time you are going to run it back down, right? So volume on the 24-hour basis has started to pick up a little bit. So people are dipping their toes, up 10.88% over there. Open interest is still down, which shows a lack of interest in taking any leverage trades, right? And the 24-hour liquidations is also up 40% with the little bit of volatility that we had yesterday, flushing some of those leverage longs as prices were coming down. So 24-hour rect scale, 253 million, nowhere near the billions that we saw recently, which came in around that, just over around 2 billion, right? Around I think it was 2.2 billion, at least reported by this. Remember, we spoke about the exchanges, which suggested that the CEO of Binance said it's probably closer to $8 to $10 billion worth of liquidations, which would be by far the biggest one that we've had. Now, it takes time for recovery following that. The only way you get a V-shaped recovery is if there's intervention from higher places like Trump or Jerome Powell from the Fed with some sort of an emergency meeting. But I hate to break it to you, I don't think the Fed care about crypto. That's the truth. I don't think they care about our bags, and therefore they're probably not going to step in for us. They would need to see something bigger break in other markets before they started to step in. The other good news is that we are seeing other countries at least pivot from tightening into easing. So maybe that trend will start to shift towards the US and they'll follow suit, right? We saw it happen already with Canada. And I think yesterday it was announced with India as well. So we'll pay attention over the coming weeks. The next big Fed meeting is happening in March, right? So bulls are at a massive juncture fighting for survival. ETH is wrecked, right? ETH BTC is wrecked. ETH BTC dropping below the rising wedge, the macro high time frame, a rising or falling wedge over here, which is meant to be a bullish chart pattern, falling straight through the bottom over there. But you are getting a little bit of buy pressure that's coming in. So again, the next couple of weeks are going to be vitally interesting to see what comes next, right? So there's your ETH chart. At the end of the day, ETH is still maintaining at least this rectangle. So of course, highs, lows, right? Highs, lows. You just wouldn't expect that it would do it that quick, but all the way straight back down to the range lows. The scary thing is when you think about something like ETH, timing-wise, this is back now to prices that had in September 2024, as well as August 2024, as well as January 2024. And mathematically, what does that mean? It means that if you bought ETH in January of 2024, you're back to break even. That is psychologically damaging, right, for ETH holders. That is pretty well. Okay, you bounced now, so you're up a little bit, but you understand what I mean. You came all the way back down to those levels. You're up, I guess, 25% after one full year. So the market has been brutalized. Give it a little bit of time to, to digest everything. But yes, you could see another downside move. I just want to be clear. You can definitely see another downside move. Consolidating over here on ETH. Remember, you have this massive inefficiency And where do we target? Typically the 50% level. Where are we targeting over here? Upside, we're targeting the 50% level. Where are we targeting over here? Upside, the 50% level. So therefore, of course, there is a chance that you could come down a little bit longer. So let's wrap it up on what do you do? What do you do, right? Well, again, if you can withstand another 7% drawdown on ETH, ask yourself what that means for your other altcoins. That's kind of your answer. You need to answer that. I think high probability you see ETH come back down to 2.5, and that's at least that's just one scenario. Could it take out the low? Of course, but my base case would be reverting back to about 2.5 on ETH, and then we'll see what happens next, right? So it is brutal. It is brutal. You have to stay strong. You have to keep a positive mindset. You need to keep your finger on the pulse. You know, now is not the time to cry and give up, right? Crocodile tears won't get you anywhere. No one's here to save you. You need to save yourself. You need to stay strong. You need to stay focused. This is a mental game, right? Remember, if you can beat it in the mind, you can beat it in the real world. So that's what you need to be trying to do. If you do want to trade these markets and you're a short-term trader, that's probably going to be the best opportunity for you. Remember, we do have both sign-up bonuses for Bybit as well as BitGet. $30,000 up for grabs on Bybit in terms of a sign-up bonus, and you're getting 10% off your spot and futures trading fees if you use the BitGet link. So check it out. The links are in the description below. That is it from me, folks. Thank you so much for joining. I will see all of you on the next one. I hope you have an absolutely wonderful day and wonderful weekend, and I'll catch you soon. Cheers for now.